Well, I'm going to have a look at the two trades that we have running from previous webinar. Well, I say two that's running. One of them got stopped out. So the Aussie 200 got stopped out. So let's have a quick look at that. So there was our entry. There was our stop loss on this particular trade. It went up almost to a 1-to-1, moved around here for a couple of days, and then we had a big old sell-off the other day, which meant then it triggered a stop loss and then triggered us out. Now, for me, if this goes down to here, there is another potential trade on this, but it's not something that I'm looking at the moment. When it gets down to there, maybe, but this has gone very, very flat. And unfortunately, that's what happens with the likes of the Aussie 200. Look at it here. If you had a trade here, you would have been in it, triggered you out, and then it took off. So I talked about stop loss hunting before. That would be a prime example. That triggers out all the lows, and then look, it takes off. Now, maybe this will happen again, that this is now the point where this will take off to the upside, which is still highly likely, that it still seems to be not quite respecting this, but in this little area. So a bounce, come back down. It bounced here and rejected it, but here, this big old bar here rejected. And then we have this big rejection of wick. So it's telling me that there is an argument going on between the buyers and the sellers at the moment, and we're not sure who's going to win. So this one at the moment is not something that I'm looking at. If it gets down to there, potentially, and I wouldn't be trading that because of trend, because then we'd have a lower high, we'd have a lower low, and then down here we'd even have a lower low. So I'd be trading that off that horizontal level. So 1, 2, 3, 4 touches. That would be, say, the 5th touch on that level. So that's why I'd be taking that there. The other one is the French 40. And it has pretty much done nothing since we entered the market. Pretty much done absolutely nothing. It's a buying day, selling day, buying day, selling day. So the entry is there and the stop loss is there. So at this present moment in time, we're slightly down on this. We're slightly down in this position. It went up to a 1-to-1 here or just above it, and then come back down. So we're about break even here. We're down the running cost of it, the spread. So the running for keeping the trade open. So that's what we're down at the minute. So there is a little bit of a trade going on there. But again, the good thing about it is it's not making lower lows. That's the good thing. The bad thing about it is that the momentum seems to have run out. So let's see, keep an eye on this. Now, one of the things that someone has asked me was, Henry, how do we manage our trade? So this one here went up and it was a 1-to-1 winner. How do we manage our trades? Now, that is something that you need to work out, whether you are someone who is looking for a 1-to-1 winner, whether you're looking for, now I'm just trying to space these out properly, 2-to-1 winner, or whether you're someone who's looking for a 3-to-1 winner. You sort of have to work it out. Now, there are massively different strategies that I use for the different markets. Okay, so with trading, a strategy is not a one-size-fits-all. Okay, because you could use an array of different strategies, but one strategy makes you money in one market and it doesn't in another. Now, why do you think that a strategy would make you money in one market and it wouldn't in another? Why would someone think that? Anyone hazard a guess why there would be movement? A little more, I think a little more than that. Fluidity of the markets. I need a little more of an explanation on that as well. Anyone else? The markets trend differently. Yep, I agree. I did not want to say volatility. Volatility really makes it, because all volatility means is movement in the market. So again, no, you need to be a little more specific. Forex moves differently to stocks. Yep. Okay. So general consensus, most people understand this. Okay, so we have a market here that look trends. We know that there's trends. The only question is that have we got in at the top of this and let it falls over, or whether we get triggered out and then it goes. That's the only question, because look here, you could have got in here, the market triggered you out and then it went up. You could have been highly unlucky there. You could have taken this one, went up, hit a 2-to-1, come down, probably triggered you out here and then went off again. So this is where trade management comes in. Now, unlike anything, there is no hard or fast rules for this. You have to work out what works for you. Now, as a trader, I gave everyone at the beginning rules that you stick to a 3-to-1 risk to reward. So risk 1%, your reward is 3. Now, I like to trade stocks and indices, and I will do a small bit of foreign exchange. I like to buy the likes of cryptos and buy stocks, whereas I will trade FX, stocks, and indices and metals. Okay, so I'll trade them and I will buy the underlying assets on the rest of them. Now, when I'm buying the underlying asset, risk to reward really makes a difference to me as long as I risk 1% of my capital. So when we're trading here, we should have a spreadsheet and we should have indices on one spreadsheet. Then we go to the next spreadsheet, FX. The next spreadsheet, we should have precious metals. The next spreadsheet, we should have stocks. And the idea would be is that you're using a strategy, the same strategy on all of these markets, every one of them. And you do a portion of 50 trades on each of them. Because on stocks, this one, the 3-to-1, will have a much greater return on investment than the FX. Why? Because FX, or foreign exchange, is a sideways market. Whereas I would expect a 1-to-1 and maybe a 2-to-1 will have a much greater return on investment than the 3-to-1 on FX. So the idea is to optimize, make sure you understand. Now, the problem is that we never know. So someone asked me, Henry, so this one, I had a trade that went up. I had a couple of trades that went up and I was 600 quid in profit. It went down to, I was actually 50 quid down. And now at the minute, I'm 200 quid back up. Should I take the trade? Should I take profit? Should I not? And that is, with trading, the $64 million question. Does anyone ever remember that program? $64 million man? Or am I just showing my age now? So the problem is that no one ever knows this. All you have to do is stick to a predetermined strategy that you have used a spreadsheet for, that you have worked out which one works for you and which one doesn't. Okay, and if you're trading FX, a 1-to-1 may be much more profitable. If you're trading indices, a 2-to-1 may be much more profitable. Trading stocks, a 3-to-1, that's the one I would recommend. If you're trading precious metals, it may be a 1.5-to-1, maybe a 2-to-1. Okay, so make sure you've done this work, because that is not something I can answer for you, because I can tell you what works for me. I can show you my stats, but remember, you will take different trades to me. So then my analysis, my back testing will be null and void for you, because you will take trades that I won't. Why? Because we are different people. Even though you might have the same strategy as me, you might have the same makeup as me, you might even have the same checklist as me. But the difference is that you will take a different trade than I will. Okay, so make sure that you actually are doing the little bit of work that you need to do, so you can differentiate what trades and where and what strategy and how to manage a trade. Because one of the big things with trading is not finding a good entry. One of the biggest things with trading is how on earth do I maximize the most profit from a single trade. Now, if I pull up the likes of Morgan Stanley, so MS, this is something that I keep reverting back to, this chart. Now, there was my entry. I hit it 3-1 here. Now, I still have this trade running. Here was my entry, and my 3-1 was about here. I still have this one running. So what I did is, once the market was running nicely, once I understood that there was still loads more upside in this, I actually par closed both of these trades and left the other half running. So on these two here now, 260, 400, 480 quid on these two trades, where I banked already 300 quid from both of these as well already. So I par closed half it, and there's half missing. Look, I've moved my stop loss into inside break even. So I physically can't lose on any of those trades and let them run. So that's another way of trading. And that's something that you need to work out. That's something that you need to do a little bit of homework on. You need to get an Excel spreadsheet. You need to do whatever it is to actually get to that point. Now, I use my lead tracker here. So I use this. So this is the one that I use. Some of you will have seen it before, some of you won't. Now I'm going to post this in the group here for you guys. And the way it works here is that I put a trade in here. Now, I only ever risk 1% of my account. Okay, so remember, if I'm trading with 10 grand, I will only ever risk £100 of that. So it means then I'm never over risked on a particular trade. Now, how this works is that the trade either hits a 1-1, 2-1, or 3-1. And I'll put down the eventual gain that I have here. And then my loss, so 1.2% on this particular one. So the market didn't trigger me out at 1%, it triggered me out at 1.2, unfortunately. So I lost a little bit more than my 1%. So the idea is to keep on filling this out. But on the right-hand side here, what I've done is I've actually put a 1-1, 2-1, 3-1, and even put a trailing stop. Now, some brokers allow you to have a trading stop, some don't. So the idea here is that, look, this one hit a 2-1. I made 2% on it. So I would automatically then put this one as 1%. Oh, see, this is a read only. Okay, so before we go anywhere, see this one here? It says view only. So I'm going to send this link to you. So this is what you will have to do. You'll have to go to File, and you will have to make a copy. So see this? You'll have to make a copy and then rename it. So rename it whatever you want. So webinar test. And as it loads up here, we can scroll down. Now we can edit this. Now we can, whoop, down further, scroll down here. And look, it's all a drop-down menu. So all I have to do is, now they're going to give you two options. It's either 1% win or 1% loss. So if this one already hit 2%, it would have hit a 1% here. Again, if I've hit 2% here, I would have hit 2% here on this one. See this 3-to-1. Now I need to go back and check, did Euro Aussie, if I hadn't have closed the trade, would have hit a 3-to-1, yes or no? If it's a yes, then I put down 3-to-1 here. If it's a no, I put in -1. Now the trailing stop one is a little bit more in detail. And I'm not going to go through the trailing stop one today. Okay, I'll do a YouTube video and stick it up there. So that is one that, but the other one is the trailing stop. So this is your normal trading. This is exactly what you did. And then this is without emotion. So we have no emotion. We're going to go back a week later and look at the trades and we're going to fill these out. Now, the idea here is I have 1, 2, 3, and I get down to 50 trades. And it will tell you which of these columns has returned the most profit. Now, looking at this with only one trade in there, the 2-to-1 looks the most profitable. Okay, now this is foreign exchange. Where if we go to the stock market here, here's the stock market. So I filled in some on this one here. Now, also because the stock market, we have loads and loads of stocks out there. They're random amounts of stocks. So unfortunately, I couldn't fill them all here in this spreadsheet. But if you look at the bottom, see where it says stock list at the bottom here. If you go to the stock list at the bottom, look down here, I've left some of these open. So which means then you can now put it in whatever one you want. So we'll put in HW LTD. Okay. Put in cap locks as well. So you've all bought stocks in Henry Ward Limited. So go back to CFD trade here. So these are all CFD stocks. And we're going to put in here HW. And look, it comes up. So there's HW. You traded this on Tuesday because today is Tuesday. It's AM. And my outcome was a 3% winner there. Okay. So you've all won money in this one. It's a 1-to-1 winner. This is a 2-to-1 winner. This is a 3-to-1 winner. And this was a 3-to-1 winner as well. Okay, across the board. We've made money across the board in this one because Henry Ward Limited is a good stock. And then, as we can see, I filled these in. So just imagine we've now filled in all 50. Now, I actually have no idea of the results here. So we'll go down to the bottom. And it's telling me that this one here, the 1-to-1, so this is the 1-to-1 column, is made me 1% over how many trades? 1, 2, 3, 4, 5, 6, 7 trades. But look at this one. The 2-to-1 column has made us 3%, or the same amount of trades. The 3-to-1 column has made 1% over that period of time. But look at the trailing stop. The trailing stop loss has maybe 6.5%. Okay, so see all these trades here. So we're adding these up. We're adding takeaway, add takeaway, add takeaway, add takeaway. So this one is add, minus, add, minus, 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 add, minus, add. So it's adding all these up. So these are the trades you've taken. So it'll add up what you've won. So then here is trailing stop loss. So look, this is the one here that maybe is 4.5%. So that's SQ. So this was actually a trade that we placed. So I actually took a 3-to-1 winner, but if I had to use the trailing stop loss on it, I would have made us 4.5%. Remember the SQ trade that we took, everyone? So some of you would have been on the webinar. So if you're on the paid webinars, you would have seen that trade. If you weren't, you probably wouldn't have. Okay. So here's that ticker. Now, I do not want anyone to request, oh, Henry, can you give me access to this sheet? You go to File, you go to Make a Copy. Anyone who clicks on this or share and then requests access, I will ignore you. So that's that ticker there. And then you have underlying stocks. Now, the thing with the underlying stocks is we don't really need to fill this one in. This one is just sort of for your own analysis. You don't really need to fill it in because we are not trading underlying assets like the 1-to-1, 2-to-1, 3-to-1. So for instance, Apple has taken 20 years to get to where it is. If you buy it today, theoretically, it could take another 20 years for it to double. So for you to get a 1-to-1 out of it, for you to get a 2-to-1, it could take 40 years, 3-to-1, 60 years. Okay, so that's the analysis behind it. But see this here? This will make you money. It is absolutely tedious. It is one of those absolutely obnoxious things that everyone hates doing. This will make you money. I cannot specify this enough. You have foreign exchange here. You have the stock one here. You can copy and paste this and add a new window in here and put lots of precious metals in here if you want, and indices. You can put in as many of these tables here as you want, but you want to do a section of 50 trades. Now, once you have these 50 trades done, what I would do is I'd open up a new page here and mark it FX, and I would copy and paste the 50 ones here. So go to File, make a copy. All right, bear with me. Here's the read-only one. That's the read-only sheet. Sorry, my bad. So I don't want everyone editing the same sheet. Yeah, but make sure you make a copy. Make sure you make a copy, because if you work on the same copy, everyone is editing the same sheet. Okay, so that's the joys of Google Docs. So if you make a copy, then no one else can see it. But this here will absolutely make you money, because the amount of times myself or Ben or any trader gets a question, oh, Henry, how do I manage my trade? What's the best way to manage it? And unfortunately, there is no right or wrong way. We can only ever give you what we have done. But remember, you're a completely different trader to me. So filling in a spreadsheet now, what I do every time I place a trade, so you can see it here on Morgan Stanley. I have this trade marked. Look, I have this trade marked. So that mark will stay there as long as either eToro crashed the charts or I edit the cookies. So you know, sometimes you're on a help desk with someone and they say, oh yeah, clear the cookies. Now, if you clear the cache and cookies here in Google, you will lose all your edits here, and it means it's gone. But if you edit them like this, you will see very quickly whether the trade has hit a 1-to-1, 2-to-1, 3-to-1. And how we do this is, if we go to the pencil, see this measuring tool. Now, I put this measuring tool on the entry. So see that line? So see this line going across? It's on my entry. So I left click once, let go, and I move it down to the stop loss. Now, if you look down here in the bracket, I have 32%. Now, it doesn't really matter what the percent is, but if I move that there, and in the bracket, whoa, I move my mouse, in the bracket, it says 4.5. Now, if it goes up 4.5, that is a 1-to-1. So there's 4.5, that's a 1-to-1. 9% is a 2-to-1, which is there. That's a 2-to-1. And then a 3-to-1 is 13.5. So there's a 3-to-1. So anything above there is extra. So at the moment we are here, which is 20%. 5 fours is 20. So just under 4.5 or 4 3/4 to 1 at the minute. And that's the idea. So that's what we're trying to do. We're trying to work out. And if I put this one in, so from there to there is 5%. Up to here at the moment is 32. So that's a 6.1 or 6.2 to 1. So I've risked 100 quid. If I hadn't a closed part of the position, this would be now 600 quid. So that's the idea. Let them run. But you have to be in the right market. You have to have the right setup. Because if we're looking at the likes of, say, FX, so Euro USD. So we'll look at a trend here that we have. Look how easy it is to let this run. If we look at Euro USD chart, what's the trend here? Unfortunately, the market doesn't run like that. So it means your analysis has to be much, much better. Your entry, your exits have to be so much better. Do we expect this now to come down and hit this floor? Or is the floor there? Or is the floor there? Or has it already hit the floor? And this is the left shoulder, this is the head, and this is the right shoulder, and this is going back up. That's the, unfortunately, that's the question you have. And because of the foreign exchange, then is that there a double top? Whereas when you're trading a stock as a CFD, you never worry about stuff like this. Is it going to hit there and then drop again? A prime example of that was gold. I don't know anyone here who trades gold, but we talked about it on the webinar on Friday night or Saturday night. Look, with a triple top, hit its head, come down, hit its head, come down, hit its head, come down. There was a really nice trade short there on that. Now, again, I didn't take that because that's not how I trade. Is that a high probability trade? No, but it is still a valid trade. Channel. So there is my stop loss. Entry is there. Now, if you're trading the likes of this, you then need to, because this is a different strategy. This is a reversal strategy. This is a reversal. So the market is going up here and you're now expecting it to reverse. So on our spreadsheet, we need to open up another section here. And see what I have at 4x. You need to change that as 4x reversals. And then the next one is 4x continuation. With the stocks here, all mine are continuation, so I don't need to change that to reversal. So make sure you specify which trades are which. So that means then you can then do a little filter on the likes of this and actually work out which trade works best for you. Okay, and that's the idea. We want to make sure that we're editing this up properly. Make sure that once we are doing this, because this is absolutely tedious. I absolutely hate it. It's one of these things that it just annoys the heart and soul out of me. But this will make you money, plain and simple, because you will know that on FX market, just for example, say the 1-to-1 works best. You know when you're setting up a trade on the stock market that if we're using this data, that a trailing stop works better. Okay, and the big difference with the trailing stop here is that, look, you have small wins. Okay, whereas would have hit a 1-to-1, but the 2 and the 3-to-1 wouldn't have hit. So you had a small win here, a small gain. But then look at these two. These two were big winners. And that's the idea. Now, it doesn't always work out that way. Sometimes you will have a 3-to-1 winner, but the trailing stop got stopped out to break even. And if I go back to Morgan Stanley, that would have been a prime example here. So if I go to MS, so the first trade that we placed. So see this one down here? If we had to put a trailing stop underneath this, so the stop would have moved to here, then the stop loss would have moved to there, and would have moved to there, and then we would have got stopped out here. Well, it would have moved to there, so we would have got stopped there. So we actually would have got stopped out at break even on the Morgan Stanley trade if we had a trailing stop loss. I don't know if anyone remember placing this trade. We had 2 losses in a row. So we actually gave this one a little bit extra on the bottom. And look how useful that extra little bit on the bottom was. It meant we didn't get triggered out. And now look where we are. So that is something that I cannot tell you. It's something that you guys need to do the research on. Now, as people, as human beings, we are lazy. Everyone just wants to get that winning. Everyone just wants to get that winning trade. Everyone just wants to make money. No one wants to put in a little bit of work. But again, this is super, super, super important. I'm not talking about here seeing the trade or trying to pick the entry. I'm talking about once you have the trade in, you should have a strategy already set up before the trade changes. And a prime example of that was copper. Now my target on copper was 3-1. So we took this trade here. There was the entry. There was the stop loss. It went up, moved sideways, and then it popped up to here. At one stage, I was 2.1% up in this trade. And look what happened. They came the whole way and stopped us out. Why? Because my target was 3-1, which meant I got stopped out here with a 1% loss. So you have to pick your way of trading and then stick to it. Why? Because overall, it works. You're getting rid of the emotion. Problem is with emotion, if you've had 2 or 3 losses in a row, and then this goes up here, you take profit, and then it goes on to 10-1. How annoyed are you? How pissed off are you? You just want to look, Henry, I can't win when the wins are small and the losses are bigger. Okay, that's the wrong way we want. We want the losses small, but the wins big. Okay. Has anyone got any questions on the likes of the spreadsheet? Now with the foreign exchange one here, I only have the majors in here. So here are the majors, these ones. I have this locked so you guys can't edit it because generally people fuck shit up. Okay, it is how it is. People just generally do things wrong. But if you're someone who's good at this stuff, it's very easy to unlock it and put in the rest of them if you want. But has anyone got any questions on the likes of this? So the idea would be if you do 50 trades, copy and paste them, open up another page, and then leave them there. Don't ever delete it. Do your 50 trades and edit them and put them into a new spreadsheet and then leave them there. And then you do a next batch of 50, okay? And then you put them in there. Instead of working off a batch of 50, then you have a batch of 100 trades that you can actually do your strategy off of. You can go, well, Henry, over the 50 trades, a 3-1 works best. But when I do it over 100 trades, a sample size of now potentially a year, the trailing stop works much, much better. Okay, and that's something that you guys sort of need to do. You never, ever delete any of this data. You just add to it every time, because every time you add to it, it's giving you more and more and more information. Okay, so that's a no. Nobody has any questions. Okay, cool. So I'm gonna crack on a little bit of crypto at the moment. So crypto has had a little bit of what I would say a busy week. So did anyone see this jump on Litecoin? Did anyone make any money on this? So went from there up to there, which is a 33% gain, and then came back down. Okay, so this is one of the problems with the likes of crypto, that this was fake news. This was fake news, is that Walmart were going to start using Litecoin. That's what happened there. Now it was posted on a legitimate Litecoin website, and then it was taken down. But, and this is, I know a lot of you agree or disagree with Ben. Okay, so one of Ben's things is that cryptocurrency is never going to be taken seriously because of the, no, it wasn't put on, well, it wasn't launched on Twitter. It was put on one of the Litecoin's websites, and then Twitter got a hold of it, and then it started being retweeted. And then when it was retweeted and I saw where it was from, then everyone thought it was actual news. Okay, so one of the things that Ben stringently says is that for this to become a legitimate currency, stuff like this has to stop. So we've had a 33% rise on it because of fake news, whether it was someone trying to be funny or whether it was someone trying to prove a point, whatever it was. This is a prime example of it. And then this takes away, and it takes away from the legitimacy from the likes of the crypto world. This is one of the negative sides of it. But unfortunately, we just have to live with the good and the bad. And anyone who jumped in here and it made them profit, well done, happy days. You got a little bit lucky. But that's one of the problems with the likes of cryptocurrency. Now, again, I do think cryptocurrency eventually will be here to stay, but there will eventually be regulation. It has to be regulated in some particular way, so the likes of this doesn't happen. And if this happens, then there's huge fines for it. But again, that's way down the line. That's way down the line. But at the minute, it was a fun week, and we had a little bit of a rise on Bitcoin because of it, and then it also dropped because of it as well. So it not only affected Litecoin, it affected some of the other coins as well. But for me, this has to come back down to the 146 level here, or even then the $100 level for me to look to jump into this at the moment. We'll have a look at BTC. Again, I got asked the other day, so Henry, what do you think's next going to happen with BTC? Well, there is a little more downside in this at the moment. It looks like there's a little more downside on this. So whether it's going to come back down to the 40,000 mark or the 42,500 mark, or whether this is going to be the beginning of the next run, that I don't know. I can't tell you, but it looks like there's a little more downside than upside on this. Kashi, I don't disagree with you. Litecoin will hit 100K on the next bull run. I don't disagree with you. It very well may. Why? Because we have a lot of people who jump on the bandwagons. So if it's endorsed by a couple of more companies, it can easily hit 100K. It can easily hit 200K once it starts getting incorporated by companies again. But the Litecoin scenario brings back to the straight of the companies. Okay, so just imagine you're a barista, okay, and you are selling coffees for £1, and you're there. All of a sudden, you're selling your coffees for a certain amount of Litecoin, for instance. Litecoin goes up 33% in a matter of minutes. You're making lovely money on your coffees, and then it drops down 33%. So which means then you now have to charge more for your coffees just to break even. And that's in the space of a couple of hours. And that's the problem with the likes of cryptocurrency being incorporated by companies at the moment, is that there's so much movement in it. How do companies work out what to charge people, how to charge people? So at one time in a day, a coffee is one Litecoin. Later on in the day, it's 1.5 Litecoins. If you come in later in the day, it's 3/4 of a Litecoin. So that's the problem with it. And that's the problem with the likes of this. But yes, I do think the next bull run will break this here, and it could very easily hit the 100K. So we have to find, you could trade coffees. Well, you can trade coffee beans. So the idea now is, where are we looking to get in? Do we think this is value? If it hits the 100K, then we are up 60%. If it hits here, we're up 20%. Okay, so is this a value market here? So if you buy here and it drops down to 30,000, what do? Do you offload your position, or do you buy more? What happens if I hit the 20? Do you buy more again? So the idea is that we slowly at positions where we're happy to get in on these, we're happy to buy. Okay, now for me, if it gets down to 40,000, I will have an order on that to buy again. And if it hits the 30K mark here, the 20,800, I will have another entry at this point here. So 30,500. I will have another order there. So I'm looking to buy this as it comes down, if it comes down. And if it doesn't, then I've missed the boat. ADA is sort of the prime example of that. It never triggered me in. It never triggered me in at this particular point. So I bought some at this level here. I missed this entry on this one. And this other one didn't come back down. So I bought it here. And I'm down at the minute 9% at the moment, which is grand. If it comes down to here, I'll buy a little bit more. If it comes back down to here, I will buy some more. So the idea is that we're expecting this now to continue. And the idea is we buy it on the way down, not on the way up. Okay? On the way up, you're jumping in on the bandwagon and you end up getting left holding it up here. Whereas we're buying it on the way down at these key levels. But again, you also have your long-term goal. What's your long-term goal? Do you expect the likes of 88 to hit $20? We expect it to hit $50,000. Okay, the same with Bitcoin. Are we expecting to hit 100K, 200K? Where do we expect it to go? And if you are someone who believes that this will continue to run, you slowly buy up with your wages each month, buy a little bit here and there. But the idea is to make sure you're set up. So BTC is up 3 or 4% in the last 24 hours. The rest of them should run. Stuart, that's yeah, your opinion. Maybe not. So does anyone want me to go through anything, whether it's crypto related, whether it's stock related? Is there anything you guys want me to cover? BT hasn't had a good run over the last month and a half, has it? Horizontal. Now it depends on which cap you're looking at, like this. So it depends on what cap you're looking at. So the overall momentum here is down. And it's no coincidence when I hit that double top there that it started dropping. So we have a look at that there. So look, we're seeing bounce, 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 and then hit it again, and then sort of drop like a stone. Now from here, it's down $50, which is a pretty big drop on this. We also have this little small floor. So there's 1 touch, 2 touches, 3 touches, 4. If you're looking at the shorter time frame, the trend has been up. Now, I'm going to let you guys answer me this. I'm going to let you guys answer this. So, do you think this is going to A or B? So, do you think this is A? Let me get the arrows up. This is going to, oh, sorry, drop a bottle of water. A, bounce up like that. Or B changes to red, breakdown, bounce, and then retest. So there's A, the green, or B, red. So we're 50-50 at the minute. We're still 50-50. Oh, we are very 50-50 on this. Oh, I'm actually quite surprised with that. I'm actually quite surprised with that. Okay, does that... Now, my opinion on this is that looking from here to here, we have a pretty strong momentum down. We from here to here have an overall momentum going down. We've had the shorter time for momentum going up. So the pandemic going up. So for me, I'm expecting this to continue going down. Literally, because there is more pressure to the downside at this moment than there is for stopping there. Now, unfortunately, it is just an opinion. It's just what I see here. I don't see a reason for traders to start buying this now. I don't see a reason for enough buyers to start trading this now. We have a lot of momentum pushing this down. So we have a lot of momentum pushing this down. Clear all the drawings at the minute. Change this. So we have a lot of hedge funds pushing this down. So that's what's going on here. We have hedge funds. We have people. We have a lot of people sort of driving us down. We have a lot of hedge funds, and I don't see it stopping here. It just doesn't make any sense for the hedge funds to jump out of this particular point. Because there's so much momentum, they'll potentially drop down to anywhere around here, anywhere around the $121 mark, in my opinion. But if I was a hedge fund manager and I was shorting this, I would be very happy with this. I don't see this as a level strong enough to hold it. Down here now, that's a different story. See all around here, that's a completely different story here. I would expect at this particular point to potentially have a point where we may have to take profit somewhere around there. Now, the ideal scenario would be to take profit right down here. But I may, if I was a hedge fund and I was shorting this, I'd be potentially looking to park close on position here. And if it continues going down, brilliant, I'm in bonus territory. But if it started going up, then I would liquidate my whole position, or even potentially start buying up some of the position. But I don't see why it will start changing here now. I'd expect it to come somewhere around into this area, in my opinion. But I've often been wrong before, but that for me is the logical reason. Now, if you want to go and have a look into BT, into why this has dropped, why this ran here, are their earnings good or bad? Are they expected to be good or bad? Is this quarter meant to be worse than the previous quarters? So that would be a potential looking into. Have they lost some football? Because remember, BT Sport, that's a big thing for BT Sports. Have they lost the Champions League? Have they lost someone in the Premier League? That's a big thing for them. So that is something I would also be looking into. Why this has dropped? Is there any particular reason for it? So technical, looks like it's going to drop more. Now, fundamentally, why has this dropped? Okay, I want to also have a look at a stock that was talked about on the group here. one that I popped up. Let me see if I can get it. CMCSA. CMCSA. Okay, so is this trade here valid? Is this trade at this moment valid? Entry there, stop loss here. Let's hit the floor once, twice, 3 times, 4 times, 5 times, and it's now touching a 6th time. Is this trade valid here? So, Francisco, you said yes, but risky. Why did you say risky? Marcus has said, how do you define overextended? I'm never sure. Okay, so someone has said, Henry, how do you work out whether it is overextended or not? Okay, so how are you seeing the trend is about to turn? Now, someone has asked, so while you're writing that, someone has asked, how do we know when it's overextended? Now, the answer is we never know. Absolutely, we have no idea. We have no idea whether this is overextended. If we look at this trend from April, this has literally been trending for a year and a little over half. Someone said this needs a big correction, but doesn't the whole market, doesn't the stock market as a whole need a correction? Not just this stock. That's true about the whole world. The whole of the stock market, the whole of the US stock market needs a proper correction. So unfortunately, we never know. We never know. Now, a couple of people have said, look at this high here, and then this high here, and then this high here, and then this high here. So these highs seem to be getting a little bit lower. Okay, I will take that in on board. I don't see that is not a disagreement. That is not a disagreement. So you can see these highs are getting lower here. But are you then ignoring this one? Do you then ignore that one? In this particular scenario. Now, the answer to this is that we never know. We never know. If this one hadn't been here, so just say we were talking about this here, would I have taken that trade if I had hit that trend line? No. Literally for the reason that you just gave here, that these highs are getting lower and lower and lower. Absolutely. But then we've had a pretty big jump to the upside here. Has come back down. So which means then that it is broken out of that little sort of pennant and has now popped to the upside. Now, obviously, there's no guarantee. There's no guarantee that this is going to jump to the upside. But the probability of this going up is still quite high. Now, see this trade here. Forget about yesterday's bar, so because it's still this trade is still valid. Now, out of 100, okay, I want to see people's opinions. Out of 100, what's the probability of that trade going up? Well done, Todd. Well done, Stuart. So the probability of this trade going up is 50-50. Any trade has a 50-50 chance of going up. Remember, every time you place a trade, it literally has a 50-50% chance. Okay? Never, any trade that you ever take has a 50% chance of winning. It has a 50% chance of losing. Now, once you incorporate other stuff in here, then the probability changes. So once you pop this in, this in, this in, this in, and this in, this changes. So if you're talking about a standalone trade, this trade here has a 50-50% chance of winning. Once you start taking it as not just a random trade, that you now have a pattern, you now see a sequence, you now start to see, instead of having randomness anymore, it now comes into a pattern. This is where it now becomes higher than 50%. But if you're talking about individual probability, it has a 50-50% chance of winning. But once you start putting in these other things, the probability goes up. Also, the stock market generally goes up. Now, the probability of a trend continuing on a stock market is 60%. Okay, so not only is this a 50-50 chance of buying or selling, then you also add in the probability of the trend, the sequence that we can see here. So it adds an extra weight to it. And then once you add in that the trending market generally continues 60% of the time, the probability of this goes much, much higher. It goes way up. But again, it's still, as a standalone trade, a 50-50 chance. But in my opinion, this is something that we could potentially trade. Oh, get rid of that. Undo. So just giving you guys sort of a heads up on something like that. That's something we could do. Now, we placed a trade before on, was it PNL? And look at this trend line, something similar, PNL. And then this is what happened. So look at this nice trend. Look at this trend. It's going on since April. The same as that other stock. Entered here. And look, we got stopped out here. Unfortunately, we have losers. Unfortunately, we have losers. There is no right or wrong read with it. This one particularly was a loser. Whereas AHT was very similar as well. Chart. Look. This one actually started in March, not April. Look, we are now. We took this trade. We're now up here. If I look at this, 228 quid up. Now I've par closed this. So this, if I hadn't par closed it, this would be 450 quid up of 100 quid, traded. So do we ever know when this market's going to turn? No. We have to look at these subtle changes. We start looking at these patterns. And once it gives us a pattern, then we take it. Now, you guys talked about the highs are getting lower. But look at this one. This was a double top. And we still entered here. So we entered here, and then there was another entry there. We could have entered there again. So there was 1, 2, 3 entries. So this was the one that we took. There was a second one. And then there's actually a third one there as well. Come back to this trend line again. Okay. So the idea is make sure when you're doing your analysis on points, make sure that you're seeing the patterns. And then if it hits your rules, have faith in your execution. Sometimes you will have winners, sometimes you'll have losers. But the idea is if you do the same things and the correct things over and over again, you have more wins than losses. And you look at Johnson & Johnson and wheat. So I'll have a look at those two. So they're the two last ones, J&J. And I'll have a look at wheat. Okay, so wheat has now broken this trend line. So we had this bar here, come down and touched it. Wouldn't have been a price action bar we took. This one here potentially have taken, and then it dropped. So we never got triggered into this trade. So we never got triggered into this trade. So we have the overall market is now made a lower low. So if we turn off that, that is not something we're now looking to trade as in a trending market. We have a double bottom here. I would expect this to come back to at least the 161 level. It is not something that I'm looking to trade long or short. I'd wait for it to break and retest here and then short it, or wait for it to come back, hit this level here and then short it. That double top has to hit either of these levels for me to short it. And then it's in a good area. Would I be looking to buy it here at this stage? No, not at all. And wheat. So wheat has come back to this level. So look, 1, 2, 3 touches. And we wanted to come back to this level. And that's exactly what it's just done. It's come nicely back to that level there. Get rid of that trend line. So it's come nicely back this level. So get rid of this here as well. Did anyone take that trade long? Anyone take that trade long there? Now you could have entered here on this big pin bar or brought your entry down inside that inside bar. Anyone took that? Really nice trade. And the problem with this is not a stock. So this is more like the foreign exchange market with a little bit of a trend. Okay, so we can see the overall trend is up. So it's a bit like the foreign exchange market with a little bit of a trend. So we get these key areas and we're looking for the bounce off the key areas. Is it too late to enter now? For me, yes, it is. For me, it's way too late. Now, there's nothing stopping you jumping down to the 4 hour. Now, we'll probably get some sort of rejection here on the 4 hour at this particular time here. So it'll probably have some sort of rejection around here. So it'll probably go up, hit that, come down, or go up and retest it. The ideal scenario would be to retest that level. And if it retested, then that would be the next entry on this. That would be the perfect entry to break and retest there on this 4 hour, and then we'll be looking to buy it. But if it hit here, come back down, there's no real area. There's not a nice level there for this to bounce off of. So I wouldn't be taking it if it hit here and come back down. I'd be taking it if it broke and retested this one. So just a little heads up, guys. Anyone here who has done my course? Anyone here done my course? And anyone here signed up to NAGA? So as you know, so in the process. Okay, so I've had a couple of questions here. So see the course, you jump in the course, you can resume the course. So the platform I'm using here is NAGA. So I'll click on trading accounts, and if you click on the trading accounts, you can open up a virtual account or a real account. Okay. Now, something that what I am doing for the people. Now, this is not for the advanced people. It's for the people who have done the course here. So people who are pretty much beginners, people who are pretty new to this cycle. So on the 1st of October, Friday, the 1st of October, I am doing a trading day for people who have done this course. So people who have done the course, I'm doing a trading day for people who have done this. Now, for the people who are on my trading groups and stuff like this, anyone who wants to come to that, just reach out to me and you're more than welcome to come to it. There is no cost to the course or the day. We will be placing some live trades, but we'll be going through this course in detail and a little bit in more advanced as well. But it's something that NAGA has sponsored. So anyone who wants to come to this, you will have to have a live NAGA account. What I've heard is there's a few people who have jumped in on it, but are not getting the emails, they're not tracking under our link for some reason. So anyone who has set up an account with NAGA over the last month and a half, please email Alex. So I'll pop Alex's number here, our email address. Not available. I'm in Australia. But you never know. I may be able to stream it as well at the same time for you in Australia. So anyone who has set up an account there and is not under us, because this is for people who are just under us, see the email address there I've sent to everyone. Email Alex and say, Alex, I'm under Henry. I have done his course. So seemingly there's a little bit of a problem with that tracking link. But make sure you reach out to me. I don't care whether you reach out to me via email, whether you reach out to me on the Discord, wherever you reach out to me. There is a trading day that I'm holding on the 1st of October for anyone who is a NAGA client, anyone who has done the free beginners course. There's no cost to it, and there's about 30 spaces available on it. So anyone who wants to come in, yeah, so Kevin, you need to open a NAGA account and put some money into it. Okay, that's their only criteria. Anyone who wants to come in it are more than welcome, and it is a basic course. So the likes of Cassie and people like that is not something that you guys should come to, you bore your tits off. But for anyone who is new to this, anyone who is starting on their trading journey, I am doing a trading day on the 1st of October. It is in London. I have a venue already set up. Okay. And I will speak to anyone tomorrow night about anyone who's in on the subscription for the Wednesday webinar. Look, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely day. But don't forget to email Alex. If you have done my course, you've opened up a NAGA account, make sure you email Alex. And anyone who wants to come on this, let me know as well. Thank you very much, everyone. Bye-bye.